Banks are done with the old FICO scores. If you have a trade line on your credit report, you will be affected. If you're looking to go into homeownership anytime soon, you need to know about these changes that they're implementing right now. This new algorithm will increase your credit score or it will drop your credit score if it sees this one recent activity. FICO 10 and FICO 10T is being implemented faster than we thought it would be. Another mortgage company, Premise Mortgage Company, a subsidiary of Premise Bank, becomes the first bank-owned originator to adopt FICO score 10T to increase access to homeownership. They're saying that the FICO score 10T provides even greater precision in making lending decisions. FICO score 10T can help lenders better manage credit risk and default rates with extending competitive credit offers to consumers compared to the versions of FICO score used by Fannie Mae and Freddie Mac today. FICO score 10T can enable an increase in mortgage originations of up to 5% without taking on additional credit risk or reduce default risk losses up to 17%. Now, we talked about this a couple of months ago when they said that they were going to start rolling this process out with the new algorithm towards the end of the year. But as we can see right now, mortgage companies are using this algorithm right now to pass out pre approvals. Now, I know what you're thinking. You're probably saying, well, Calvin, that's just one bank. No, they've been doing this. Let me show you. Leading mortgage lender Movement Mortgage becomes an early adopter of the FICO's most predictive credit scoring model. And you can see right here that this was October 5th, 2023. Now, we all knew that this was going to roll out at some point, but we thought it was going to be just with smaller banks. They are now implementing this with bigger mortgage companies. Let me show you. Here's a list of the 2023 top retail lenders. All right. So now, number one is Loan Depot. Number two is Fairway Independent Mortgage. Number three is Cross Country Mortgage. Number four is Guaranteed Rate. And number five is New Res LLC, or known as Caliber Home Loans. Now, many first-time home buyers actually just got a mortgage with some of these banks. As a matter of fact, some of you all watching this right now may actually have a loan with some of these banks. And I wanted to show you this. That way you can see who just became a new implementer. And I wanted to show you this. That way you can see Cross Country Mortgage adopts the FICO score 10T, providing forward-looking insights for mortgage-backed security investors. And this just happened January 9th, 2024. And you can see where it says Cross Country Mortgage. And again, that is a top 5 mortgage lending company. And that's just 2 banks, which just so happen to be in the top 10 of top retail lenders. So if you're looking to buy a home, you need to prepare for the FICO 10T. So if you're looking to buy a home, you need to know how the FICO 10 and FICO 10T is going to affect you. So why is FICO doing this right now? Well, they've been doing it. You see, FICO changes their scoring models and they update them approximately every 5 years. At least they try to be on track to do so. So for example, the FICO 8, that came out in 2009. The FICO 8 is still used today for a lot of apartments and things of that sort. And some credit cards actually use this for approval as well. Then you have the FICO 9. Now, the FICO 9, this actually came out in 2004. Now, it wasn't too many changes from the 9 to the 8, which is why a lot of companies, financial institutions, banks, lenders, they never really transitioned over to it because it wasn't that much of a difference. But something happened big between 2024 and 2020. And they noticed that a lot of people were looking better than what they are, which means that they had random, uncategorized default rates when they shouldn't have. Long story short, people that were in the 700s, that was in the 750s, 800s, were making mistakes as if they were in the 500s and the 600s, and they finally figured it out. Then once they figured it out, they came out with the FICO 10 and FICO 10T. Also, real quick, if you want to stay on top of your personal credit and your business credit, along with being able to report your utility bills to your credit report, then you most definitely want to check out Identity IQ's new product, Score IQ. To learn more about this, the link is in the description. So now, what's the quick differences between the FICO 10 and the FICO 10T? Let me show you. With the FICO Score 10, it's the easiest for lenders to transition to from older models. So a lot of these banks that still have FICO 9 and FICO FICO 8, things of that sort, this is going to be a little bit easier for them to transition to. Then you have the FICO score 10T. The T stands for trended data, and it uses that trended data to give a historic view of a person's credit history. Long story short, they're looking to see not only what you've done recently, but how you got to this point. With so many banks implementing the 10 and the 10T, you need to know this because these things will drop your scores. Let me show you how to protect score drops from the FICO score 10. Number one, paying down any high balances. Now, what's considered a high balance? Is it 10,000? Is it 50,000? Who determines what's high? See, what they consider high is really utilization. How close is the current balance to the credit limit for that particular credit card? Number two, pay balances more frequently. This means that not only will you avoid a potential score drop, but your score may actually increase by paying on your debts more than one time per month. Number three, start and maintain an emergency fund. Now, don't worry, they can't see how much money you have saved or anything like that, but they're just simply saying instead of just making the one payment on time, and you want to make sure that you're making multiple payments on multiple accounts multiple times, as well as making sure that you're prepared just in case anything bad financial happens, like a job loss or something like that. And you already have your emergency fund savings to make sure that your lenders, your creditors are being paid on time. And here's one of the biggest factors that a lot of people are not happy about. And that's number four, keeping your balances low after using a personal loan. So this is where that trended data comes into play. You see, with credit scores right now, you do something and then there's a result. But with the FICO 10T, it's going to be looking for what you did to get to this point, and then it's going to be looking for what steps have you done or actions that you've taken. You're essentially your account activity, your credit activity after you've gotten a personal loan. You see, when most people end up getting personal loans, it's usually for an item or it's usually for debt consolidation of some sort. So, what they're trying to make sure that people are not doing. So, what the algorithm is looking for is looking to see if you got a personal loan, paid off all of your debts with that personal loan. Now you have just the personal loan payment, but then you then resort to using your credit cards and then racking up that debt again. Now you have the new credit card debt and the old credit card debt inside the personal loan. If you do that, they will drop your score more. Now, here's a breakdown of what usually makes your credit score compared to the new FICO 10T. So as you can see here, the criteria payment history, which is the ability to pay back debt on time, is still going to be with old models and is going to be a part of we know it was a part of the old models, but now it's going to be a part of the new 10T. Credit utilization, which is the percentage calculated by dividing total revolving credit by credit limits. This is going to be on the FICO 10T. Credit history length. This means the longer your credit history is established, the higher the credit score will be. This will also be in the FICO 10T. Credit mix. This means that you have a diverse amount of credit accounts. For example, a car loan, a credit card, a student loan, etc. This is also going to be a part of the FICO 10T. New credit. This means that too many open accounts and hard inquiries will indicate an increased risk. That's also a part of the FICO 10T. And of course, the new trended data, which reviews management of accounts over 24 months. And it also puts greater emphasis on delinquent payments, credit card utilization, and personal loans. That's what really makes the FICO 10 the FICO 10T. And believe it or not, they just made more changes. If you have a trade line, which is essentially an authorized user account, this is going to have a lower impact to your credit score. Like back in the day, you were able to be added to someone's credit report. Even to this day, for years, many people have been using authorized user accounts, which is essentially being added to someone's credit card account. And then that payment history, that balance, and essentially how they've been using that account typically shows up on your credit report, and then that's going to essentially increase your credit score. Now, some of you all may have called this piggybacking or whatever, but changes are coming for this as well. Check this out. Now, this is a document directly from FICO, okay? And on page 2, I'm going to go ahead and zoom in here so you guys can see this. It says improved authorized user treatment. FICO Score 10T differentiates authorized users and places less emphasis on authorized user trade line information. This treatment mitigates the risk associated with the rental of authorized user trade lines, supporting a more effective assessment of the true credit risk these accounts represent. In short, no more getting 20 points, 50 points, 100 points, whatever, when you are being added as an authorized user. Now, keep in mind, this is only with FICO 10T, but it's just a matter of time as so many other banks are adding this every single month. But like I said, it's not just trade lines. Let's keep going. It's also going to have an improved thin file treatment. FICO Score 10T addresses lenders' desires for more effective risk assessment for consumers with limited credit history or thin files. FICO Score 10T's validation results demonstrate improved risk prediction for this segment of the population. In short, if you didn't have much credit or you had no credit at all, but you had a couple of accounts, but you still didn't have a FICO score, you will now have a FICO score with the new algorithm. They also changed how they look at collections. FICO Score 10T differentiates unpaid medical from unpaid non-medical collection agency accounts. This supports a more effective assessment of the true credit risk these accounts represent. In addition, FICO Score 10T ignores all paid collections. This is a game changer. Remember how everyone has been saying for years, don't pay your collections, don't do this, don't do that. Now, for the first time in history, you will be able to get points by paying off your collections. This means that you don't necessarily have to pay them in full. You can do a settlement, save yourself some money, and get that same result and improve your credit score. And of course, they finally accepted rental trade line inclusion. FICO Score 10T includes rental trade lines when reported. Rental trade lines are essentially when you all are paying rent and then that rental history is then being added to your credit report. That includes current history, future history, and even previous history as well from rent you already paid. I know there's some pros and cons about the FICO 10, FICO 10T, and what we've been so used to for so many years. Change is inevitable and it's going to happen no matter what we think, whether we like it or not. But we will be sure to keep you posted as more changes take place. If you all like this video, you're most definitely going to love the next one, and we'll see you there.